Hi, Yana. Can you hear me?
Yes, I can hear you.
Yana, can you hear me?
Yes, I can hear you. Can you
Oh,
hear
you
me?
can. Okay, so let's do this. Looks like it's just you and me so far. How are you?
Very good.
This may end up being a one-on-one.
Awesome.
Let's see.
I
Let's see.
like your view. Oh.
Thank you. We're all stuck inside, and thank God I have something to look out. It
You
gives me
know,
a sense. It gives
pretty.
me a sense of what is going on in the world. Who's walking? How many people are outside? Public transportation working. It helps me.
Yeah.
I'm gonna grab a glass of water in the meantime. We have 2 more minutes left, so I will.
See if anyone else shows up. Okay.
Yeah, sure. So, do you need anything else? Right, we have some more people joining in. Hi, Don. Hey, Joe.
Hey, Gaurav, how are you?
Good. I'm doing great. Thank you.
Good.
All right, so I think everybody in the world, everybody else knows how to manage their P&L. So we'll have between Don and Yana, and probably Joe can teach me how to do a P&L. So between Yana and Don, we're gonna make you rock stars of how to manage your money. All right, so so let's get started. It's 2:02. Since everybody knows Joe, right? And Deirdre is here. Hi, Deirdre. I'm just gonna unmute you guys. Doesn't have to be. Okay. I've done this P&L class quite a few times at this point. First of all, just asking everybody, how's everybody doing? I see Dawn nodding her head. Deirdre, how are you doing?
Doing okay.
Okay. How's the team doing?
We're doing okay. Everyone's healthy and we're okay. How are you doing?
I'm hanging in there. I have my ups and downs a little bit, but it's just too much going on, and it's actually, and I feel helpless. If I was outside, I can probably do more, but I'm not outside, and it's getting stuck with limitations, and I don't think I can. I'm not being as fruitful as I could be, though I'm being very purposeful of my actions. So, hi Betty. Okay, so I'm instead of continuing to say hi to everybody coming in, let's start the conversation. And everybody's time is valuable. So the idea behind when I started doing the P&L class about I would say about 5-6 months ago. This is maybe my 5th or 6th time teaching this class. The idea has always been, most of us think that we're managing our monies properly, but some of us are managing large teams, some of our independent agents. At the end of the day, unless you know where your money is going, you are basically running blindly in trying to manage your wealth or your expenses. And there's no better time now in our lives, especially now what we are going through in our lives now, to see what are we doing that we shouldn't be doing, and what are we not doing that should be helping us manage our expenses. So I want to share a screen from my side that I created. Okay, so can everybody see the screen? Is it better? Okay, so I want to go through something. So this is an actual condo shop P&L statement. And there are many items in here that I think a lot of our agents should be considering if they're running a team, but also they should be considering if they are really just an independent agent. So Deirdre, you have a large team. How do you manage your expenses, and how do you run your P&L?
So, I try to lead with revenue. I have someone enter my all of my books and my receipts on a regular basis, with the exception of now. At this point right now, I'm cutting everything that I possibly can cut. So.
Okay. So and how are you going about cutting everything? What does everything mean?
I had an ISA that. I'm of the mindset, and I know there's, different schools of thought on this right now, but I'm of the mindset that we have a lot of time right now to make calls, whereas we didn't before because we were out running around. So I feel that, we can make a lot of those calls on our own. So that's an expense right now that I really don't need. There's, if you really scrutinize your bills personally and professionally, I just go down every line of my credit card that's pages long and tick off those things that I don't need. And Friday I spent, hours on the phone just doing that, and either negotiating some things down or getting rid of things completely. So in a lot of ways, that's, cutting expenses right now.
100%. A penny saved is a penny earned, right? So especially we have now time. A lot of times we talked about leveraging. If you don't have the time, how do you leverage that to make more money? And if you now do have the time, which unfortunately was just thrown at us of forcefully, you have more time. Sometimes it might be challenging even now. Like I feel I'm working more hours than I've worked before, just trying to keep up with everything. However, there are certain things that I can do for sure to save money. So one school of train of thought is you cut down everything. You don't know what you want to cut down or not. You cut down everything. And then you start going back in line and saying, what do I need to do? So it's like starting afresh, but you know all those vendors. So imagine if you cut down every single thing, and then now if I needed, obviously you don't want to cancel the contracts with realtor.com or any of the places or the VA or the ISAs if to start all over again. So you just look at as if you cut down everything. And then who do I need in the next 1 or 2 days? If I need the ISA, he or she stays in place. If I need the dot loop account, it stays. If I need my conversion account, it stays. If I was paying on, I'm just going through my list, if I was paying on Zillow, that's not something I want to pay anymore. The copier, maybe I can negotiate the expense. So if you have your P&L, it's easy to go through that. If you don't have your P&L, you're going to go through every line item. Sometimes the line items are every quarterly, 6 months. You don't know what the average of the last 12 months have been. So it's very helpful if you maintain a accounting software like QuickBooks or Quicken, or the company's called, there's another one called, I think, Zoom, XOOM, not Zoom for the US, for the FaceTime, or you can just use an Excel sheet. I'll send this to you, everybody who's on this Zoom call, and you can just take something like this and enter, just enter February, March, April, and you keep doing it for the whole month. And that way you'll be able to keep track of all those expenses. And on a monthly basis, just go down the line item. Make sure you keep a business account for yourself to manage all your business expenses in one place. So does everybody have a business account and a personal account separated? So I have Joe and Deanna. So Yana, I cannot see you. Betty, I cannot see you. So if you are around, you can, don't mind showing your face. I can see the reaction. Otherwise, we can use a chat box. Or I'm assuming whatever I see from Dawn and Deidre is a universal answer for everybody. So, if you don't have a P&L, then I really highly recommend that you have to be able to maintain looking at your expenses. And people always say, well, I have my one credit card and I can look at what's going on in that expense. The problem is not just knowing what you have. The problem is how do you analyze that data? If you don't analyze the data over a 12-month period or 6-month period, then you are not going to be able to make those strategic decisions looking at that last 12 months of how the monies have been spent. So I'll just walk you through some of the stuff that we go through in our P&L. I obviously took the actual numbers out, but there's a broker service fee income that comes in because I pay a full-time transaction manager. So whatever money we come in, we pay a salary. I want to make sure I'm not collecting less than more than I'm paying, right? So that's why we have this a separate line item. Then the commission incomes that comes in. We also want to make sure we understand in our business how much money was made from buyers, how much money was made from sellers, rentals, and investments. So every closing that happens, internally, we keep a track of these things. KW does not tell us this distribution. I have to keep track of it because I want to know how much our business percentage-wise on a monthly basis, then I can manage it on an annual basis for the last few years to see if we are more buyer-heavy or seller-heavy. Where are most of the closings happening? If you don't know where your buyers and sellers heavy, then you become a buyer-seller focused agent. And what happens? Are there more sellers out there right now, or are there more buyers out there right now? Dawn, what do you think?
Personally, I feel that there's more buyers because I'm having a problem with finding them inventory without getting them into bidding wars or losing the opportunity.
Can you reach to more? Can you serve more buyers now, or can you serve more sellers now? Being in the situation we are.
That's where I'm getting confused because I'm feeling definitely my sellers are not selling because they don't want anybody going into their homes, and my buyers just are holding off right now.
Deidre, what do you think? You can serve more buyers or sellers now?
I mean, I think almost always you can serve more sellers, and I can do that to a point right now as well.
And do you know, Deidre, what your last 1 or 2 or 3 years, you've been in business for a while, what is your split on an annual basis of your buyers and sellers?
It actually varies greatly year to year. My business is over 90% repeat clients and referrals. So sometimes I have buyers, and sometimes I have more sellers. So it's not a set percentage.
So can I put you on a spot by asking this question?
Yeah.
It's not a set percentage, but you still know that percentage.
I don't know it at the moment. However, it's something that I do look at when I look at my year-end numbers.
Perfect. Great. Don, do you know your numbers of the buyer and seller's distribution? If you don't know it, that's something something that I keep that I'll guide everybody who's on this call as well, that it's extremely important for you to know, because as the market changes, you can anticipate the change that's coming in without getting stuck in the middle of it. This downtime that we have right now is very unique. We are not in an economic downturn. We are in a market where it's more health based and medical based. The economy didn't crash. We have a pause, and none of us know that how it will be reacting once the market opens up again. So we all with the hope that as soon as the market opens up, there might be a total influx of buyers and sellers. There's another thought that everybody's going to be scared and nobody's going to be out there looking for things. But we should all be aware that this is not an economic down cycle of, we were great in our economy about 2 weeks ago. So keep that in mind and continue to quote telling everybody around you as well, the buyers and sellers included. We are just in a different position because it's more of health-based shift. This is not an economic shift. Mm-hmm. So once you know these numbers, you have your total commission income. That tells you how much money you made combined, because you like to know the distribution. The cost of goods that I look at is how much we paid our agents, because it's extremely important for us to know what our cost of goods are. If I'm paying out too much commission, then I'm not going to be able to make the expenses meet. So it's very important to know how much are we paying out. And many times, Dawn, for Deirdre, she has a team. Yana, you're a single agent, and Deirdre, you run a team. So you all three are in different positions. This could be, if you are Deirdre, you would be, how much money are you bringing in yourself, and how much the money is being paid out of the team. If you're in a team, I will highly recommend you. If you bring in an income from a buyer, let's take a commission of 10,000. If you bring in you should put yourself on a split. If you don't know if you just leave all the money in the company and you just go around paying all the expenses underneath it, you may be left with some money back, but you don't know if you're better off being an agent or you're better off running a team. So it's very important to take this split. So let's just take a split of, I'm just taking a number, 70-30. So if I, as a leader of the team or a rainmaker, brought in a commission, I'm going to put myself on a 70-30 split. I'll take 70% out, put it back into my other commission account, and I'll leave 30% back into the company for operating expenses, just like I was a regular agent. If I wasn't doing that way, then I may be bringing in 70% of the business coming in and have all the expenses met, but I'm basically funding the company while it's being running negative because I'm paying a different commission split to the agents. Do you understand that? No. Is that a no, Deirdre?
I don't understand that last part. I mean, I understand that the split, and I understand.
Here, so I'll just use some numbers, right? So let's say on an annual basis, we brought in $100,000 of buyer money, $100,000 of the seller's money. How much of that percentage of the business was actually brought in by Deirdre? If $150,000 money was brought, let's say from here, $150,000 was brought in from Deirdre, and $50,000 was brought by the other agents, right? So this is Deirdre, and this is agents. I would like to know what I do for my company is I will say that I take 70% on a commission split as if I was an agent. This way, is this? Okay. This way, 105,000 was brought in, and then the remaining money stays in the company. I will take $105,000 and put this money into a different bank. That is my commission income as an agent, not as a company owner or a team leader. Then I have to pay the remaining money. Let's say 50,000 was brought in, and let's say they are at a 50-50 split. I'm going to say times 50, that means $25,000 was paid to the agents. If I sum them up, I will know $130,000 was paid out. So I know 200,000 came in and 130 went out. So this becomes this divided by 200,000. I paid out 65% average commission to the agents. If I don't do this and I don't understand and I don't keep a track as if I was taking the money out, I would assume that the agents my company is performing really well, because what's going to happen is 200,000 minus 130, I'll think I made $70,000. The challenging part is I might be, which is $150,000, right? So I might be 150 divided by 200, I might be bringing in 75% of the volume. But if I bring 75% of the volume, is that a good business or a bad business? I think it's a very challenging business, because something happens to me, the business shuts down. So if you're running a team, I have to make sure that I am more heavy inclined in the agent's money than my split. So I would like more heavy on the agent split if I'm running a team. As an independent agent, like, Dawn and Yana and Betty, I understand that, this is going to be more like 100% of your money, right? So that's why it becomes challenging that if God forbid something happens to my business individually, if I'm an independent agent, my business will shut down. So the idea behind having a business on a larger scale is, well, how do I make sure that I work with other agents if I have to bring in for other co-listing teams? I'm looking at you and Dawn and Yana, is that how do I work with other people that it grows more organically? And from Deirdre, your side is, if you don't know this number, and I'm assuming you do, but let's just say if you don't know this number, then it's challenging for you to know how much of the business is relying on you. But if the business is relying 90% of your business, okay, at least you know your number. So I like to know, because I have a larger team, how much money is coming in because of us and how much money is coming in that I'm paying out to the agents. And I don't want to leave this money back in the company. Otherwise, I'm just funding from the sales that I'm doing personally. So I only can see Dawn and Deirdre. So I don't know, Deirdre, was that helpful or?
No, it is helpful, because for me, like, I'll keep listings, but almost every one of my buyer leads I share with my team. So, that's an important number to know, and how you break it out is really interesting. That
right. So
look at that.
Think about this way, Deirdre. God forbid, okay? This is all like in future. God forbid something. Actually, I take a different approach. God forbid nothing happens to you health-wise. But let's say a different approach, that you decide you don't want to sell anymore, and you want to replace yourself with somebody else. How much can you afford to pay that person? The only way you would know is if this 105,000. So what you're going to say to yourself is, last 1 year, I brought in enough business that if I paid 70% to somebody as an agent, I would have paid $105,000 out. But if I can find somebody to do the exact same thing that I'm doing, and I can actually replace this to less than 70%, less than 105,000, then I can actually make some money left behind for me after paying the agent. But if I'll just take a different number, let's say $50,000 was your money, $150,000 was the agents who brought in the money. Now 70% of that is only $35,000. If you end up paying somebody $50,000 salary, you actually overpaid from what you were making. It's going to come out of your profits. So you don't bring in, so your time and your time value was not big enough to replace yourself, right? Because then you're going to end up paying more split to the agent, and nobody's going to work at 35,000. You see the point?
Mm-hmm. Yes.
So this number is extremely important. So I always say, don't fund the business by working in the business as an employee. You have to fund the business. Otherwise, why even have agents if you have more expenses? Then just keep the whole amount of money. Sometimes it doesn't make sense to start a new business as a team. Just be an independent agent. The only way you can make that intelligent decision is if you understand these numbers. So now I break down, and my philosophy is, if you have any vendor that you pay more than once, twice, the third time gets his own category. So if I pay anybody in a year more than twice, I'm putting in a separate category. And then some of the other ones gets to the miscellaneous advertising and promotion. So, what we did as well last week, between our team, we went through every category. We looked at every expense. We looked at each one of them that we thought we didn't need. And I consider the expenses in three forms. Extremely necessary for you to build your business for lead generation. You can't skip that. Your ego, kill that one. And your client's ego, kill that expense. Every expense you can put it down under three names. I need this to grow my business and run my business. This is for my own personal ego. This is for my client's ego. And examples of my own ego would be, I need a bigger, I post an ad on certain magazine on a monthly basis. That's branding. Well, does it generate my business? Well, it doesn't really generate my business. It's good for branding. Well, that's considered my ego. I'm going to cut it. About my client. I told them I'm going to do a $1,200 or $1,500 brokers open because I'm going to show them I can do a really good job. It's not really needed at this point, and they probably understand because they care about a client, about a buyer, not really about the bigger sale that we do. Sometimes it becomes a client's ego that I need for my $1 million listing to be done X, Y, and Z. You cut that expense because then it becomes a script practice of what do I tell the client and how is that going to be valuable for all of them. So if you take all those consideration, you can go into your expenses and you can cut down. Between all my companies, last week itself, we cut down over $100,000 in expenses in all the companies combined. We literally just went line by line and said, what is this? Yes, no, no. What is this? Yes, no, no. What is this? Yes, no, maybe. Cut it in half. What about this? Yes or no? Definitely we need it. Conversion, that is a CRM. You got to keep it. Can we negotiate with them? Maybe, maybe not. Not every vendor is going to negotiate. They may also have certain guidelines where they just can't negotiate. It's they also have a business to run. Not necessarily that everybody's going to come back and say, yeah, I'm going to waive off or I'm going to reduce it. They just can't. If somebody came to Deidre today and said, hey, can you not charge me any commission but sell my place? You can't. That's there's a certain amount that you just can't let go. So if you don't have a breakdown of this, it's easier. Have you filed your taxes for 2019? If you haven't filed your taxes for 2019, you need to categorize each expense that you have been running for your business as a separate item. Another thing I'll advise you is you should have a separate credit card and a separate bank account for your business. They should not be intermingled. You have to keep it extremely separate.
Hey, Gaurav, I think that's a lot of things people don't do. They don't have a separate bank account. They don't have a separate credit card. And therefore, what happens a lot of times is they just don't capture all their expenses or understand everything they're spending because they're putting it in different places, not identifying that, just missing it when it comes time to look at their expenses.
That's correct. And I'll tell you one more thing that people don't do. If $10,000 comes in, here's a simple answer, right? So if $10,000 comes in as a commission, $10,000 comes in a commission, I had to pay, it's a time to buy investment property. As soon as I got a $10,000 check, I'm going to pay off $3,000 on my credit card that I had owed before. I'm going to take $7,000 and give it to somebody to invest in because I was looking to buy a property in conjunction with somebody else. You know what the problem in this one is?
No tax savings.
No tax savings. When the time comes in for taxes, how much was left? Zero. What everybody should be doing is take $10,000 before any of these things happen. You have a tax account or a savings account. You take whatever tax bracket you are in. I will take 35%. You take 35%. That is not your money. That is the government's money that you will end up paying no matter what. If you're going to get some returns back, you still need to take this money out. It was never your money. You wait for the taxes to return your money before. You do more higher tax deductions. You do less tax deductions if you know you're going to get some money back, so that you can get you don't have to get that much money back in the end if you want more cash flow for now. But now you're left with this minus. Now, if I'm left from here, how much money do you have left for credit card and investments? Now you make the decision. You cannot use this money for everything. There's so many agents who get out of business, even though they're running a great business, because they don't keep this sanity. So not let's think of an example, right? Let's just say there's a $10 million agent, right? So $10 million. And let's say they're making about average about 2.5%. Their gross commission was $250,000. If they took this $250,000 and they had their own their own, like let's say they have one assistant in their job, and I'm just going to put random numbers, okay? As I say, $40,000 is the assistant. Then they have, from here, let's just say they have a cap in the company. Then you have your royalty in the company. Then you have, $100 is your monthly fees. Then you have your transaction fees. I'm just going to put like $1,000 in transaction fees. Then you have your other marketing expense, and let's just put there about, let's say, $30,000 in marketing expense. Now, if I just take this,
Cap is 40.
Say that again. What was that? I didn't hear that. Say that again. Oh, I thought I heard somebody say something. Surety. Okay. Did I miss something, or was somebody saying something?
I'm not sure.
Okay. All right. Anyways,
I don't think that knows that she went off of her mute.
okay. That's fine.
Yeah.
That's fine. That's fine. So let's. I'm just going to make it 1,000 just for random. So let's say now $150,000 is left, right? So if they had their own, so now if I had to pay all these expenses and I have $150,000 left, and now from here I say I have, I'm going to pay my rent or my mortgage, my car, my insurance, my kids' education, some household stuff and miscellaneous and stuff, whatever it might be, right? So if I put here a random number of, give or take, $70,000 total, including all those things. Now I'm left with this minus this, I'm left with $80,000. And from here, I say, well, I made some great money, and I'm going to put some money from here. I'm going to take $50,000 from here and put it for investments. So I have $30,000 savings in my bank balance at the end for savings. And now you go for your tax time, and your accountant calls you and says, okay, so you made $250,000, you're in a 40% tax bracket, you owe $100,000 in taxes, minus the deductions. Let's just say the deduction was $30,000. You owe a $70,000 tax liability. You had $30,000 in the bank left because you thought you were very rich. You invested $50,000 in your investments, and you have a $70,000 tax liability. There are a lot of agents who are $10 million producers who cry at this time. I've had conversations with many, many agents who say, I don't know how I don't have money. Because what they can also do is they go get a $2,000 car. They're actually doing more vacations. They're doing their house, his mortgage is way more higher than they can afford because they think and look at this number. So definitely keep some money for taxes, because it's the more money you make, the higher tax bracket you will be in. So if you're not saving that money, you will get hit at the end, and then you'll be caught with a tail between your legs. Be very, very careful. Any questions on this? I like this Zoom call better, actually. I can do this thing on Excel sheet as compared to on a board, and I'm scribbling all over the place.
I think we all like the Zoom calls better.
So now if you look at the advertising and promotion, and then, I have the RE office, we pay that expense. We have some automobile that we pay for our employees to go in the office for RE and parking. I have bank charges, the G part and real estate licenses, cable bills. We have accounting and other consulting fees that we pay. We make contributions to other charitable organizations every year. any donations we made to some events. We support KW Cares and many other organizations ourselves. The dues and subscriptions that you're involved with. I'm involved with the BIA event and many other organizations. We pay for our employees' health insurance. We pay for holiday parties. It's a major line item. Anything in my mind, anything over $500 should have its own line item so that I know I can, how much money I'm spending on that. Information and technology, new computers, legal fees, meals, entertainment, office supplies, the payroll expenses. I divide the payroll expenses into 3 categories that I'm paying. Your accountant or bookkeeper might be keeping track of that. I like the idea of just knowing how much it is. Postage, repairs and maintenance in the offices, because we have mega agent offices. We pay for all bills ourselves. The signs you spend, the taxes, the telephone expenses. We have answering service to off-hours calls. The travel expense, going to events. We take some of our team members with us, and then the website hosting. If I take all these expenses, and then I have I take all my expenses, which is here. I'm gonna put X. I take my money, what I made from profit. After I got my total commissions, I paid my agents, and then I have some gross profit left. From gross profit, I take all the expenses out. I'm left with a net income. So now let's just say the net income is $10,000. Okay. So I have my expenses being, right now I saw here, we made $200,000. We paid the agents $110,000, so I'm left with 90. If I paid $80,000 for the expenses, I'm left with 10. This is my profit, right? But if I'm an individual agent, and Yana and Dawn, I'll look at you as an example. If I'm an independent agent, you know how much I made? I made this 10,000 here, and I made this 35,000 here, right? So if I'm a higher agent, like in this case, I put Deirdre as not producing as much and her team producing a lot. I'm going to move this to 150,000 as if she's producing major business and her team is supplementing her efforts. She made $105,000 as an agent as well. But I have to make sure that this money, 70,000, and this money, 80,000, is expenses are never more than this. Otherwise, the day I stop working, I go negative. So I can just put this here, is equal to 70 minus 80. When I'm teaching a class, sometimes, just because I know this stuff very well, I go really fast. I want to stop and let you ask me questions as well. Betty and Yana, any questions?
I don't have any questions per se. I kind of hopped on a couple minutes ago, but I think that one thing to note is a very important thing that you just went over is what I have seen with a lot of team leaders in particular who are top heavy producers themselves, where they then grow a team under them. And the team, it does supplement their efforts in terms of, sales, but it's that the team is built out and infrastructure wise more to service their agents as opposed to their individual business. And it does become bottom heavy almost, I guess, where if that one mega agent did stop doing their sales or at least took their sales out of the equation, the business is actually running behind. And they don't realize it because their own sales are doing so well that it's just keeping the numbers going when they don't take a deep dive look at it. So I just think that that's a very important thing to focus on because I see it a lot.
One thing that's very well said, Phil. One thing also happens is, God forbid, this person falls sick for 3 or 4 months. Then what happens?
Right. Or wants to take a vacation because they worked hard.
Or take a vacation because they worked so hard. And I have a child, and there are a lot of women in our industry. Somebody's trying to expand their family, and they're out to grow the family. Then what happens? Or they get into the point where they've been doing this for the last 20 years. They can never get out because they're so heavy on this number on themselves. So how do you get out of the business? So there's so many things that we look at. Otherwise you become a glorified employee of your own business forever. So unless you have, some sort of a plan of, listen, I'm able to get myself out. And sorry, Deirdre, I put your name there. I'm going to say Rainmaker. I don't have personal with you. But let's say the rainmaker at some point wants to get out for whatever reason. You can't, because then we are prisoners of our own business. We can't get out. So it's very important, for us to be able to get to the point. There are a lot of people who are happy being not to grow the teams, but teams who are there need to think about these things. So I think Deirdre, you're in this room that I think fall in this category. Yana, I know, is a great producer. Betty is a great producer. Dawn is a great producer. You guys are individual independent agents, but it has to be very careful understanding if you decide to grow the team. It's helpful for you to understand these numbers, because at some point you could say, listen, I'm making, if these numbers were such that you said, I'm a $10 million producer and I have $150,000 in income on buying side, and I have $100,000 in selling side, I'm producing 250, which matches a $10 million production. If I paid somebody 30%, 40% of commission, and I'm okay giving all my buyers away, so how much more money would I have to give back? I'm going to be giving away 150,000 times 40%. I'm going to be giving $60,000 away. But if you don't know this number, how are you going to make that decision? If you don't know your trend for the last 3 years, how would you know this decision? So you could actually know if I was producing, the remaining monies, which you can say sum of 100 plus, which is, actually I'm going to put in 250 minus 60 is basically 190. And then I say out of 190, I was acting as an agent and I took out 70%. You're going to say, I'm going to take home 133 out of this whole thing. And I'm going to give 60 to somebody else. That means I still have 57 left in the business to survive. So you could make these decisions as you decide to continue to grow one by one or one agent at a time, is how much money from this commission am I willing to give to another agent? Because do I want a buyer's agent or seller's agent? Where do I want to leverage the most? If it's going to take me more time working with buyers than working with sellers, let me get a buyer's agent. If I get a buyer's agent, how much am I going to pay them? If I said I'm going to pay them 40%, well, this is how much it's going to cost me. But if you don't know this number, how are you going to know this? What if you didn't know this number, and out of this 250, this was 225 or 200, and this was only 50? Guess how much you gave away? 80,000. So now you have a business decision to make. Hey, if I did this, I will actually end up paying 80,000 to just have somebody as a buyer's agent. You cannot make this decision otherwise. So it's very important for you to have the numbers. Unless you have numbers which make sense, they're just gibberish.
There's actually two ways to look at this, Gaurav. One of the ways you're looking at is more of a, in this scenario of tracking it, is more of a reactive approach, as opposed to more of a proactive approach where you could take the MREA and the 30-30-40 breakdown and start out the bottom and work your way back up.
Right.
If you read through that book, you start out the bottom as far as what is it you need to make out of the business? What's that number? And then back up into 30% expenses and maintain that, and then your 30% commissions to figure out what that top line commission number you need. And then from there, how are you going to gain that? Are you going to do that with agents, or you do that by your own, blood, sweat, and tears, or how do you get to that top number? So you could use this a variety of ways. One, to track your performance, but also as a budgetary process to start out what you need to make and back up in that top line commission as far as how you're going to set your team up to achieve that.
That's very, very well said, Joe. Thank you. And so that let's talk about that, because that's going to lead to our next conversation about something called profit first. So the profit first conversation is about, this is what I have done in the past that gives me this. Now the question comes out to what Joe is recommending is, well, don't look at this and look at this and look at all the expenses and wait to know what this number means. You should look at your business and say, I want to make $100,000 profit from this business. How am I going to achieve that? So to make $100,000 in my business, how much expenses am I going to incur? How much profit am I going to have? How much commissions paid am I going to pay? That means how much commissions do I need to achieve? That means how many buyers and sellers do I want to have if I want to have them 50-50? If I want my business to be 50-50, $10 million, that means I want to be able to make, sorry, this computer is getting slower. This divided by 2. Ah. Times 2.5%. That's not this. That's 3. So if I want to be 50% of my buyers, I want to be 50% of my sellers, how much money do I need to make to get the total gross income? Out of which I want to pay somebody, which I want to pay, let's say on my buying side, I'm going to pay 40% to somebody who's going to act my buyer's agent. And that is going to leave me $190,000 after I paid $250. 140 was my 70%. I paid 50 to somebody else. Was 190. Okay, so forget my Excel sheet. So here, let's just do this. If I made $250,000, I had $200,000 in gross commission for myself. I paid 50% to the agent. I am left with, my gross profit is going to be, what is my gross profit, Don? If I had 250 that I brought in, I paid 50 to somebody else, and I paid 70% to myself. What would it be?
Pay 70%.
So I'm going to pay 250 minus, I paid somebody else 50%, 50,000 already, right? Minus, I paid 50,000 already, and I'm going to keep myself 70%. I'm going to pay 140 to myself, 50 to outside, 190, and I'm left with 60. So if I want to make $100,000, then this math doesn't work. If I want to make $100,000 in my business. But if I say, okay, whatever I make, I'm going to leave in the company. Now I have $200,000 in income and I want to make $100,000. That means my expenses cannot be more than 100,000. So it's a reverse way of looking at it. Instead of looking at how much money am I making, how much money am I paying, how much money I have left with, how much money actually I spent, to talk about how much was my profit. That's what the reactionary, retroactive conversation that Joe is talking about. You need to be more proactive and say, I want to make $100,000 from this business. For that, I need to achieve, if my expenses were 80,000, right? For me to have 80,000 worth of expenses, because I saw that from last year, I have to make at least more than money. For doing that, I need to be able to, and I want my business to look like 50-50. Here's how the conversation will look like. And I think Joe is going to teach a class for a whole hour on this, because he's going to be teaching a class about how to manage this P&L on the reverse psychology of building this business up. And I never ran this business myself this way. My business always was, how much is the gross volume, how much of money is coming in, and once I get to this point, how can I reduce this? Just the expenses. And I think most of us do this way, right? I don't think I'm the only one that does it. And then I hope I have some money left in profit. But Gary is teaching us and say, wrong way of looking at it. Why are you in business if you don't make money? So how much money would you like to make? Use that number and then go reverse. Since I only see Dawn and Deirdre's reactions and I don't see Betty and Jana's reactions, so back to you both. What are your thoughts?
No, I think it's really helpful. looking at it from that standpoint of, how much you want to make them work backwards from that, because that also helps you leverage your expenses. So, cutting the fat. Like I keep an Excel spreadsheet of all my deals and my expenses, but I don't do this. And this would be really helpful for me because it keeps me in track.
Right.
So that's, that's something that I need to work on.
Deirdre, your thoughts?
My thoughts are that I've read Profit First. I think it's a great book. I get starting with where you want to end, and how Gary does all his models. Quite honestly, like that whole, like I was watching you do all that, going like, wow, I need a lot more work on this because it's going to take me a long time to figure out.
So I'll give an example. So when I bought the Keller Williams Philadelphia franchise, we came in and said, the first thing we said was, as partners, how much money do you want to make from this company? And that was the first starting point we did.
Sure.
We looked at what Antonio was making and we said, are we happy with what he's making? And we said, no. Do you think we can increase it? Well, can I increase it to $10 million a year? Unrealistic expectation. So we said, can we increase the profit by 40% or 50%? So we picked a number and said, okay, we want to make that much profit. Actually, I'll be lucky if I even make what Antonio made this year, but I don't think I can survive if I start not monitoring the expenses. But so we went here. We went at this number and said, we need to achieve this number. And then we went up on all the expenses one by one. And we just started cutting expenses from the first conversation that we started. We cut every expense as much as we could in the company with the thought as if we don't need it. And if we need it, we'll add it back up again. So we started cutting a lot of expenses. And there are some expenses that we had to add back up again and said, listen, now we really need it. Like for example, the report account, we cut him so much that people started complaining that we don't have enough support. So we went back and added more expenses on top of it again. So that after that, we started seeing how much money was left in. This section, Chris, myself, and Brandon and everybody else actually had purposeful conversations. How much is our business on buying side and selling side? If you have more people on the selling side, that brings in more signage outside and more leads in their business. Who they will have more listings. That means you can hire more agents to do more open houses because there are more listings available. So we started purposely looking at these two numbers and said, who are those people? And if we had to get more people who are on the buying heavy, on selling heavy. And we started going after them as well and talking about what values can we add. So we've actually had some specific conversations with some listing agents in the city and said, who are doing your open houses? Because we have a lot of agents who would like more listings to do open houses for you. And they said, no, we don't have anybody doing it. And we always struggle. I said, listen, we have so many agents who are looking for open houses. If you join us, we can guarantee you that we'll have open houses coverage. So we started the open house group in our Facebook so that we can actually achieve that for them and keep up our promise that we had. So we started looking at this percentage very, very seriously as well. So a portion of our business in KW Philadelphia went from here the same way. So if you start talking and thinking purposefully about what are you trying to achieve, you could easily go behind here as well. Obviously, the more expenses you cut, the better this number will look like. And there's no reason why this should not be looking at 120,000. Why I stick to 100,000? But if there's a minimum I'm going to make, I have to cut every expense and increase the income as much as I can as well. So both ways of looking at it. If you know, if you don't know these numbers from last year, what has actually happened, you cannot read history and change things. You need to know your numbers from last year and then be able to make the decision for this year or next year.
Sure.
Say is I think that you hit on the point, Gaurav, is to understand where you're at now. Conceptually, it's the right choice to always project, your year and your expenses and what you want to make and what you need to do to hit that number. We know that most realtors don't start on that foot, whether they don't know how to, or, just the knowledge, or just in practice actually doing it. But I think that the best place to start is just figure out where you're at now. You know, it's nice to figure out where, you know, where your numbers would fall when you make, you know, do $10 million a year. But even the first step to that, which is the right thing to do, is take that half step back and say, okay, I didn't start on that foot. Let's figure out where I am at now. And then you can actually start to put everything into practice, you know, building the Excel sheet, looking at your real numbers, figure out what expenses you do incur already that maybe you shouldn't be, what expenses you don't, you know, occur that MREA tells you that you should allocate this much to that expense. And then once you know where you're at today, I think it's the next right decision and thing to do is to figure out where you want to be. But I think that first step is figuring out where you're at today and all your expenses, and you can, you know, run that back against what you did last year. That's a good number to use for that half step. But I think that's really the first thing, is to figure out where you're at now or where you were at last year to start the rest of the process, I guess.
Right. And you know, with this new unprecedented times that we are in right now, I would highly recommend you go through every single expense that you have. And I think Deirdre is saying the same way as well. If you can go right now, nobody should have any reason to say, I don't have time to go back for last 1 year. That's just not fair to yourself. We all can take out more time today than we did before to be able to go back and check, you know, our previous last 1 year. If you have filed your taxes, you should have these numbers. If you haven't filed your taxes, you need to do that anyways. So you need to go and do these numbers for 2019. Once you get those numbers together, just go through your credit card and take a goal. Start with the same concept. How much expenses am I going to cut down? Take 20% as the average. You know, because there's a universal rule called 80-20 rule. That 20% always works in every scenario. Take a 20% expenses. Look at all your expenses and put 20% next to it and say, well, how am I going to reduce 20% expenses? Then go through the category and start taking things out. And it could be meals and entertainment as well. You don't, you know, it could, and we could have actually another line item here called gifts to clients after closing, right? Because that's, as an independent agent, you probably have something here as a line item of $100 or $50 on every closing. So whatever your expenses are, you got to create these categories. And then you look at each item and say, how am I going to cut down? Can I buy, you know, is it worth to calling Lindsay and ordering 25, you know, items together as compared, and she's giving me a 30% off. Well, that's where I can spend the money or save the money. You should start looking at every single item and say, how am I going to cut down 20%? So that 20% is, I realized it was Betty. So you take out the last year's expenses and cut down 20%. That'll automatically increase your bottom line. There's always things that we can cut.
Last year is a good place to start. I guarantee you, if you only look at this on an annual basis, you're going to look at it at the end of the year and say, oh my God, I spent how much money on that? So it's something you really need to look at. Unless you're really disciplined, it's something to look at least quarterly, if not monthly, if you can have the time to do that.
Mm-hmm.
So
the nice thing is that when you do set this up, it's so easy to go back and look at afterwards. I mean, we do use this, and I shaved $1,000 off of our monthly expenses in like 2 hours.
Yeah.
Right. So it's you know, we use QuickBooks. You can use any other version that you feel works best for you. And I don't think even Excel sheet matters. You could do that as well. You can be creative in Excel sheet, but whatever version you use, as long as you can manage your numbers and you understand what's going on. So this last 4 minutes left, I just want to recap. I think it's extremely important for people to have some sort of understanding of their expenses in running any business. Independent agent, a large independent agent with one assistant, or a team. If you don't know your numbers, you will never be able to strategize and understand what the data means. From looking at those numbers, make sure if you're a rainmaker, you allocate some expenses for yourself. Otherwise, you might be funding your team with all the expenses from your own income that you're making. It's better to be an independent agent than to have a team at that time. You don't know the answer unless you know your numbers. Once you know those things as well, make sure you watch your expenses or every line item. Then we talked about, if you know these numbers, how to make it better. Then you start the other way. If I made this much money last year and I want to make this much money this year, what do I need to do? So you go back and start analyzing this. You want to know how your business should look like, not the way it does look like. So this is good to understand, where do you need to be? And that's when you start working on. So then if I say my buyers are 80% and I'm only 20% of my sellers, then what do I need to do to get more listings? Because that will feed into more buyers in the future. So you have to analyze this number for sure. You need to know those numbers. You have to know how much you're paying your team. Because if the cost of goods is very high, and that's what happens to some of the large teams who bring home, and I'll give you another example, and then 1 minute left of that. There are people who do $50 million. They bring home 1.25 million. They pay their agents 70 to 80%. They're left with 250,000, and their expenses are 400,000. They don't make any money after that. Because it looks like I'm doing $50 million on transactions, but my cost of goods is very high at 80%. And they are called running a brokerage within the brokerage with higher split. Or they'll say to them, I will definitely give you 70% on all your transactions. I don't have any value besides this to give to you because I only have a monetary benefit to give to you. So don't go to the brokerage company, come and work with us. But then you have to provide all the benefits that the brokerage company provides in your expenses. And then there's no money left. So it's extreme, and those are kind of people who go out of business really fast. And there are a lot of large teams, even in Gary Keller's room, who said, unless I see you're making more than $1 million here, I don't want to have you on my stage. Because what's the use of saying I'm doing $100 million of transactions when you're not making money in the end? It's just an ego play. So a lot of people are running that game. Don't get caught in that game. The idea is not to be a $100 million agent. The idea is to be $1 million profit agent. This is what matters. At the end of the day, we're all here to build relationships, help each other, but also to provide an opportunity for our family and for our careers as well. If you're running negative, sit home and watch TV with your daughter or with your kid. But don't make money by stealing from other people and losing your integrity. So how do I run a clean business, but it's still profitable? It's extremely, extremely important. All right, last questions, one question or two, and then we can end up at 3 o'clock.
I have a question. If you have, from an independent individual, if you get various splits, which one would you use?
Say that again?
If there was various split percentages, which one do you think would you use as an, yeah.
Very simple. You use buyers, my lead, and I'll say insert buyers.
Oh, you just laid them out.
Lead.
Sorry. Okay.
So and then sailors, my lead. If you have separate splits, and then same thing with everything, so that you can keep a track. Right? Got it. What will happen? What happens a lot of time also, Dawn, it's a great question, that if I don't have this, and I feel all I know is I made $250,000 in the end of, let's just take a number. Let's say I made $100,000 gross. And I start believing in myself that, you know what, I made a lot of money. And I'm going to actually go independent at this point. Not realizing that the buyers was 50,000. My own person was 10,000. My own seller was 15,000. And my, let's just say seller's company was 30, 10, 60, 75, 25,000. Should I go independent? No. No. But there are a lot of people who go independent because they made $100,000, and then they go independent, and then guess what? They all of a sudden they realize how much expenses that they were not paying. And now they have to pay. So now this goes away. This goes away. They may be able to increase this to double. They increase this to double. You're only around to 50. 5 not working. 50. And I actually added $15,000 of expenses that I didn't have before. Now I'm left with 35. Guess how much I made from 100 to 35? Now I can survive. There are a lot of agents who say, "Oh, last year I made $100,000. I'm going to go independent because my team is only paying me smaller percentage. I can make way more." So, but who knows? Maybe it's right. Maybe the company lead was 0, and they're paying more commission split. Then you should go to your team leader and say, "Listen, everything was paying by me. You didn't give me any leads, or I closed. So guess what? I need to be able to demand higher split." Right? But how can you make the discussion unless you know these numbers? Or don't make a wrong decision, because I've had people in my team who have done that and they didn't survive after that. Right? So you have to know your numbers. You can't make any strategic decision unless you know your numbers.
Yeah, because I mean, I keep my Excel spreadsheet of the deals that I've made. So I can just look at it and go down and see the deals, the splits, but I'd have to scroll through them. Like, so something
You could
like
also-
this is a
Sure.
snapshot, which I like this format better. But yeah, I can easily open up my Excel spreadsheet and tell you what I've made and if I'm working more with buyers, renters, or sellers.
You could also did and say co-buyer, right? I got a company lead, but we two are working together. I got my company lead and I was working 2 sellers. Like, you can just divide this into like 7 categories. The more you want to, that's okay. Right? So you can easily, but this is very important. Everybody should be able to do that. All right, guys. Any other questions or hopefully this was helpful.
Very, thank you.
Okay, I'm glad.
Yeah.
Anytime, if you want me to help you review it, you want to create categories, more than helpful. More than happy to do that. What I'll do is I'll send this Excel sheet in an empty format, or actually, if you want this whole garbage that I put on this sheet, I can send that to you as well. I'll send you 2 sheets. I'll save this one, and I'll save the empty one, and I'll send you guys both. So it's Betty, Jana, Will, Nate, and Joe. I'll send you guys.
Thank you.
All right. Thanks, guys. Bye. Have a wonderful
Thanks,
day.
Thank
Keep
you. I'll
prospecting.
see you
Keep
later,
working.
Gaurav.
Bye.
Bye, guys. Bye, Deidre.